The Fed loses. I'm sorry.
Yeah.
Fed losses. Loses losses. They breach $100 billion as interest costs rise. What?
Can you believe it?
This, according to Reuters. So let me get this straight, just to be clear. We got upset with Silicon Valley Bank. We got upset with First Republic Bank. We shut banks down. Signature, Silicon Valley, First Republic, effectively. And we dismantled them and sold them off because there was a run on deposits because they had securities that were underwater.
Oh, no.
They had these assets on their books that they bought that had a lower interest rate than they could have otherwise gotten in the market at that point in time for similar situated assets.
Because if they were to get those same similar type assets today, their values would be higher because those interest rates would be higher.
Because interest rates have gone up.
So the interest rates that they have for those assets that are lower are now getting valued less.
Well, wait a minute. Fed losses breach $100 billion as interest costs rise. That sounds strikingly familiar. Let's get into it.
Let's do it.
The Federal Reserve losses breached the $100 billion mark. Central bank data released on Thursday showed. And they're likely to go a whole hell of a lot higher before the red ink stops. The U.S. Central Bank is continuing to pay out more in interest cost than it takes in from the interest it earns on bonds it owns and from the services it provides to the financial sector. While there's considerable uncertainty around how it will all play out, some observers believe the Fed losses, which began a year ago, could eventually be as much as double $200 billion before abating.
This is bad news, for who, right?
This is bad news for everybody.
It's bad. This is the same U.S. Central Bank known as the Fed that we routinely talk about on the show.
This is the same people who are raising rates on banks and driving banks to the situation that we now know has downgraded many of them and has put several of them out of business.
But it is not their job to produce a profit.
No, I get that. But this is hypocritical as shit.
It is. And because, look, you're experiencing the same thing that other banks are experiencing. But those other businesses, it's their job to produce a profit.
No. A prudent, sound, safe, ran bank would produce a profit.
Yeah.
But just because you lose money in a quarter doesn't mean that your year is lost.
Mm-hmm.
You can make a ton of money in Q1, make not so much money in Q2, make no money in Q3, make decent money in Q4, or be dead even and still wind up being profitable for the year.
So I went down the rabbit hole for the last 3 years on how much they made in, well, not the last 3 years. I only did 2019, 2020, and 2021, right? They made, in 2019, $55 billion.
That's it?
2020, $88.5 billion. In 2021, $109 billion. And what do they do with those profits? Well, first, they hand out dividends to the
bondholders.
Not only the bondholders, but the banks, right? The Federal Reserve banks at all the different cities. So San Francisco, St. Louis, Philadelphia, New York, all 12 districts, I believe, right? Yeah. And then after that, whatever's left from their operating costs, they give back to the U.S. government. So that amount is what goes back to the government. U.S. Treasury, anyways.
William English, a former top central bank staffer, now at the prestigious Yale University, said he sees a, quote, peak, end quote, loss around $200 billion by 2025, suggesting that the losses that we see this year in 2023 will only continue to increase through 24 and capping out in 2025 at double what we are at now. Meanwhile, Derek Tang of forecasting firm LH Meyer said the loss is likely to be between $150 billion and $200 billion by next year.
Goddamn.
The Fed captures its losses in what is called a deferred asset. I like to call that bullshit. An accounting measure that tallies what it will eventually have to cover in a future event before it can return to its normal practice of returning its profits to the Treasury. So long story short, a deferred asset is an IOU.
Yep.
It's a loan.
It's what Jim Carrey gave Miss Swanson.
Yeah.
In Dumb and Dumber.
There you go. Losing money is a very rare occurrence for the Fed, but at the same time, the central bank has cautioned many times that the situation in no way impairs its ability to conduct monetary policy and to achieve its goals.
Mm-hmm.
Yet another victim of an unprecedented set of Fed funds increases. If the increases were slower and more gradual over time, there is a very safe and sound argument that these types of losses would not have had to occur.
Right.
And certainly not as fast.
So it's widely understood the Fed's two goals are to produce maximum employment.
Maximum employment.
The maximum. And stabilize prices, aka inflation.
Mm-hmm.
Right? So although it's not their job to produce a profit, it is very hypocritical.
It's extremely hypocritical. It's the pot calling the kettle black, man.
Mm-hmm.
So at the same time, the Federal Reserve, which does have a bank regulatory arm, is criticizing banks for not being profitable when they themselves are losing money.
Mm-hmm.
They're worried about bank liquidity, bank earnings, bank capital accretion. These things aren't happening because the banks, due to net interest margin, the difference on what they're paying people on their loans,
right?
On their deposits and what they're charging them on their loans, the difference in that interest rate, their net interest margin, is now getting closer and closer to break even or negative for some community and regional banks, even some of the larger banks. I would say Schwab, which is what, the 10th largest bank in the world,
mm-hmm.
is really close to negative cash flow.
Oh, yeah. We looked at their yield is only like 2%.
Yeah. And yet the Federal Reserve this year is losing money because their policy was so hyper aggressive.
Mm-hmm.
Because it needed to be done, yet we have not been told why it needed to be done this way. Hey, look, I'm all for, if the FOMC came out and said, hey, look, we did it this way because of this, I would feel a whole hell of a lot better.